Today is Wednesday, December 28th, 2022, back for another daily review on the Nasdaq. And today I took two trades, one on Nasdaq, one on S&P, just like yesterday. And also similar to yesterday, I feel like I underperformed a bit. There was more on the table, and I actually keep going back and forth in my head on actually if it was an underperformance or if actually it was fine the way I handled everything. So just going to get all my thoughts down and start right here on the 5-minute chart on Nasdaq. So at the start of my day before New York Stock Exchange opened, so right around here, around 9 a.m. Eastern time, the first thing I'm doing is I'm taking a look at what the previous sessions did up to that day. So just looking back even to yesterday, we remember that we had the gap, opening gap, consolidation above Friday's high, and then the decline, and then the consolidation and sort of sell off towards the end of the day. And then all we did in Asia was continue this range, this consolidation. And then once we got into London, the market kind of expanded it a little bit and then got rejected back down, and then more or less stayed range bound, failing to make a higher high and then declining right before the open. So all in all, I would call all of this price action more or less range bound and directionless. So, as opposed to, there have been other days where we've talked where, there's been an Asia range and then maybe a, clean breakdown in London and then some sort of consolidation or pullback into New York and then a continuation for the rest of the day, or the opposite where we have a, some sort of decline at the beginning of London and then the market reverses and then shoots up for the rest of the day. So, there's really nothing for me to glean from this except for the fact that we are generally, which you can see here once we get to the open. So one thing that I've learned that has helped me avoid unnecessary losses is to identify these broadening formations. So what is a broadening formation? Well, it's basically a pattern like this where we are making higher highs and lower lows within this range. So if you think about it like this, where the market is kind of coiling and then uncoiling, and what happens is eventually, depending on the higher time frame or where the recent momentum has come from, it usually will eventually resolve in the direction of the higher time frame direction. So I learned that from the strat from Rob Smith. There's a lot of great videos he has on that, on this phenomenon, and it's a pretty basic thing that if you once you know it, I find it really helpful because when you start to see that you're in a broadening formation, you won't see this as a break of structure, and you won't see this as a break of structure to go long. You won't see it like that. Instead, you see a broadening formation, you will want to be taking positions at the extremes. So knowing that, because up before that time, before this first candle of the first 5-minute candle at the open, I didn't really have a clean read because we were right off these lows and we were kind of possibly, right at the open, actually, we rated these equal lows and showed some aggressiveness to the upside. So on the 1-minute chart, as you can see, I sort of have it marked out. At this point in time, the market gapped up through this short-term high, had a really strong close, and I was getting ready to set a buy limit, except for the fact that we had these relative equal highs just above, which wasn't giving a great risk to reward. But if I'm honest, my first inclination was, hey, we took out sell-side liquidity and we have this nice aggressive move. So, I probably want to be buying. The market's going to be trending up. But this is another reason why I usually don't trade right around the open. I usually like to wait about 15 minutes or so, 15, 20 minutes. And, once it became clear to me, once we had essentially had this one candle and did not see any continuation the next 2 to 3 candles, it just kind of stayed range bound. I just saw this as a liquidity grab. So we have basically a liquidity grab in both directions. So we have this, what I would call a false start. The initial move down is this false start, below these lows, and then a spike up to take out the highs, kind of confirming this broadening formation. And when you see this broadening formation, you're expecting higher highs and lower lows until eventually one side gives away. And the side that's more likely to give away is the direction that we've been moving. So we've been moving to the downside. We've been, especially just on this week alone, but even on the higher time frame, you can see we've been resolving to the downside. And so this broadening formation is more or less just a certain type of continuation pattern. And once we got that sharp move up and then just went straight sideways, I was thinking, okay, this is more likely going to be a short scenario rather than a buy. And what further confirmed that for me was looking at the S&P, because just ignore this, I'll get into this trade later, but if you look at the 4-hour chart, again, this gap from yesterday that we used to frame the short that was right here on this candle, it's still resistance. It was resistance yesterday, and it's resistance again today. We have multiple wicks here rejecting. So once we gap above it and then aggressively move and close below it, this is a resistance until it's not, until it gets reclaimed to the upside as far as I'm concerned. So the fact that I saw in S&P that opening candle, essentially, it looked even weaker on S&P, even though it's been, in my opinion, the stronger of the two. This was weaker on S&P. It was just spiking up into this 4-hour gap again and above the equal highs on S&P, and it didn't even close above it the first attempt. And if you look at the side-by-side view, you can see that what I mean. On S&P, we just wicked it a few times, whereas on Nasdaq, these equal highs or this high of day closed above it a few times. So actually, my first mistake of the day was just assuming that Nasdaq was weaker because it had been weaker. But the market is a dynamic thing, and today it happened to be a little bit stronger than the S&P. So I wish I had shorted S&P instead of Nasdaq. And because I shorted Nasdaq, my setup was the YouTube model. We have the buy side liquidity, we have these short-term lows, we displace lower, we leave this gap here, and so my entry was right here. My stop was right above the high. I almost got taken out of the trade. That's because I was in the wrong instrument. I should have been on S&P instead of Nasdaq. Although not a horrible mistake, it was still a valid setup. But I entered here, stop here, targeting the low, about 3R. Would have been a great trade. Definitely it played out. But for me, what I decided to do, I'm just going to move this to the side. Once price came so close to my stop, I noticed that, and I'll go into bar replay if that's helpful. I noticed that we had this gap right here, bullish gap. Let's get rid of that one for a second. We had this bullish gap up through this high right here. And so for me, I thought, hey, there's a decent chance that my analysis is wrong, or maybe my analysis is right and I'm just early, and price could come up and just make another leg higher before selling off. I thought that was actually more likely to happen based on just this structure, how it was kind of doing like this. This is what I thought could happen, that was going to squeeze higher. And if you recall, there was a trade last week where I was stopped out when I had basically gotten the setup here, and then it went one leg higher to take out these highs, and then I was able to get back in, fortunately, for a successful trade. But I thought, okay, maybe we are here. That's what I thought where I was in my short. I was like, maybe we are here and we're going to do another leg up higher. So the point I'm trying to get to here is that once we got back down to my entry, I decided to take 50% off my position. You can see it came down through my entry. So I took 50% off my position. And, it's because, at this point, we don't have DR confluence. The DR hasn't formed yet. I'm feeling good about shorts, but again, I'm not so confident that I don't think it can't go and make another leg higher. So to protect my psychology, I felt like it made sense to just shave off some of the trade because, usually it hits the gap, the fair value gap, and sells off or moves away pretty quickly. The fact that it didn't do that, it just made me think that maybe my analysis was wrong or I was early. And the reason why I took off 50% of the trade was to just cover myself psychologically. And yes, statistically, there's an argument to be made that, you shouldn't ever touch your trades once you're in them. If you have an edge, just let the edge play out, take the full loss. And that's probably true. And in fact, I'm pretty sure it is true because when I'm tracking my stats of trades that I touch versus trades that I manage versus trades that I don't touch at all, I usually find that I'm better off not managing the trade. And so a New Year's resolution for me next year will probably be to not manage my trades and to just kind of walk away once I'm in. But, today I was watching it and I just felt like if price was so close to my stop loss, then comes down to my entry and I don't reduce the risk somehow, and then, how am I going to feel when it comes and takes me out? Am I going to make a good decision after that? Am I going to rush into another trade? Am I going to then take another loss because I'm kind of emotional about potentially being able to get out of the trade? So again, it's probably just looking at my P&L too closely or just watching the charts too closely that made me feel this way. But I just felt like I should reduce some of the risk. Now, the reason why I didn't close the trade entirely altogether at break even was because I didn't want to feel terrible if it did run without me in the intended direction, which is what ended up happening. It eventually did play out exactly straight to target. But at least I made something on this trade, even though it wasn't what I had originally planned for. But I have to protect my psychology, and it would have felt worse to lose after coming so close to taking me out and then back to entry that I decided to just reduce the 50%. So what else? Then I realized that, yes, in fact, I'm in the wrong market. I should be in S&P because S&P at this point, if you see where Nasdaq is right around here, right even before this, it was like right around here or so. See how Nasdaq is at the New York Stock Exchange open level, far away from the low of day. At this point in time, look where S&P is. S&P has already taken out this low. So I'm thinking, okay, S&P is the weaker of the two. And look, it's sweeping this low. What if it pushes back up? And so at that point, I closed the rest of the trade. So it was at about 1.6. So 1.6, I closed, after it kind of had this bounce here and then started to come back down, I just closed it. And in hindsight, that was dumb. But even though I'm definitely leaning bearish, I just see this overall as a range, and I don't know when we're going to break this range and just resolve to the downside. So for me, I just saw this kind of not making the lower low when S&P had made the lower low, and we're at these previous daily lows. So I just decided to cut the trade here and half of the remaining position. So it was really only a 0.8% gain, which is, I felt good at the time. But then when I saw it continue on without me, I was like, you know what? Maybe I should have this New Year's resolution to not touch my trades once I'm in them. So that's what happened with Nasdaq. But then, listen, you just got to move on to the next opportunity. And the next opportunity was really, really straightforward, really, really easy. The lesson I took from this was that, okay, Nasdaq actually isn't as weak as the S&P is today. And I was just looking for a DR related trade, and we got one here where if you look at this, we have a very clean, very straightforward, very obvious scenario 1 sell setup. If you don't know what a scenario 1 sell setup is, please watch my video on the DR scenarios. This is a scenario 1. Why? Because we have here's our DR range. We have a clean break out of the range, And right at the DR level, we have, right at the DR low, we have this hourly fair value gap right here. And I wanted one more bit of confluence for where to exactly put my order. So I drew a fib from this swing high right here all the way to the low. And right at the 79%, we have the DR just above it. And so I had my entry here and my stop above the swing high, which is also above the IDR low. And, you know, at this point, again, it's easy now for me to say, wow, I wish I just held for a new low because we're bearish and we're breaking down. But I only targeted 2R on this. Why I did that? Why did I do that? Because we have this imbalance right here from this leg up. And we had taken the previous day's low. This is from Friday and also from yesterday. So we've taken out these daily lows and showed some impulsiveness to the upside. So I did not want to be greedy, and you know, I wish I had 3.7, 3.5 or 3, but at the time I felt, you know, I'm going to feel very comfortable just taking 2R. I'll take 2R all day. If you're telling me that I can get a 2R trade this easily, you know, I'm not going to feel too bad about it. So just textbook scenario 1, and that was it. And again, it's end of month, end of year, anything can happen. It's not like, even though I would consider this relatively clean price action, this time of year is not known to be, you know, according to ICT at least, it's not the best time of year to trade. So I still do when I see stuff that's clean, but I don't want to expect, I'm not, you know, rarely I don't swing for the fences anyway. I just like these bread and butter 2 to 3R type of trades, and maybe, you know, maybe I should look into scaling out, but I just didn't want price to bounce off of here and then make another run for the highs and go into drawdown and, you know, see 2R become 1R or 2R become back to break even. So, you know, 2R with no heat and no pullbacks really was a no-brainer for me to take. So all in all, nabbed about 2.8R for the day, and adding on to what I did yesterday, we're in pretty good shape for this week, and that's it. So I hope you've had a good week, and we'll be back again later this week for another review.